Now, Hormuz disruptions have triggered an unprecedented supply chain shock. At the center of the risk are the Gulf states' oil giants Saudi Aramco, Abu Dhabi National Oil Company, Kuwait Petroleum Corporation and Qatar Energy that rely heavily on Hormuz to move crude and LNG to global markets. While some have built partial bypass routes, these alternatives cannot fully replace Hormuz. In contrast, global majors such as Shell, British Petroleum and Total Energies are facing more moderate exposure due to diversified portfolios across regions. Meanwhile, Asian players like PetroChina are facing some limited direct disruption, but they remain highly vulnerable through dependence on Gulf crude and LNG. The closer a company is to Gulf production, the higher its exposure is to the Hormuz disruption. Meanwhile, Saudi Arabia stands pretty firmly against any prolonged blockade of the Strait of Hormuz. The reason is structural. Even with alternative pipelines, Saudi Aramco cannot fully reroute its exports. A significant portion of its crude still depends on Hormuz for global delivery. And this has created a deeper problem. Now, Saudi Arabia also holds the world's largest spare production capacity, positioning it as the global oil's market stabilizer. If it cannot move barrels, that capacity becomes ineffective. Now, there's also a strategic concern. Any escalation in Hormuz risks retaliation in the Red Sea, particularly around the Bab el-Mandeb checkpoint, and this could jeopardize Saudi Arabia's key alternative export route. At the same time, disruptions have threatened Saudi market share in Asia, its most important demand center, and this has already opened the door for competing suppliers. In effect, a blockade does not just hurt Iran. It in fact undermines Saudi Arabia's ability to control and to stabilize global oil markets. Now, the real systemic risk emerges if disruptions spread beyond Hormuz to the Red Sea. If both routes are compromised, then the global oil system loses not just its primary artery, but also its key backup channels. Now, the impact will extend beyond oil. Shipping flows will tighten further and insurance costs will surge, and tanker movements will slow down. This will amplify the price volatility across the markets. For all the latest news, download the WION app and subscribe to our YouTube channel.